Not knowing how to master trading psychology is number one reason why you will not make money as a forex trader. In this video, I'll be covering how to master trading psychology like a professional, and also I'll be revealing my 2 hacks that took me years to discover. Make sure to hit the subscribe button and hit the notifications bell so that you know exactly when I release new content. Also, let me know your questions and thoughts below or video topics you want me to cover, as I always take your comments into considerations when planning a new video, and importantly, I love hearing from you. So the 3 key parts to mastering trading psychology is this. Number 1, you need to understand what exactly is meant by trading psychology. Number 2, the 4 worst emotions that will kill your trading psychology. You need to understand these 4 emotions. It is important. Number 3, which is the last point, you need to understand the 2 things that will eliminate your bad emotions and also boost your trading psychology. I'll be revealing these secrets to you in this video, guys. So, what is trading psychology? Trading psychology is the ability to manage your emotions during the trade and not let these emotions determine your decisions while in the trade. This is important. And to have a good understanding of what trading psychology is, you need to understand 3 things as a forex trader. Number 1, you need a set of rules or strategy that will determine when to enter the market and when to exit the market. If you have something like this will give you an advantage while in the market. Also, you need proper risk management because you have to guide your capital. This is very important, guys. And number 3, which is the most important thing, you need trading psychology because you have to be disciplined while in the market. And if you ask a lot of professional traders, they are going to tell you that trading psychology covers 80 to 90% of the things you need. So if you can master trading psychology, the rest is very easy. And to explain further, let's say you have a strategy that has 60% win rate. That is, if you follow the strategy consistently, you are going to win 6 out of every 10 trades you take. And with proper money management, you are bound to make money in the market with this kind of win rate. So getting a strategy like this and using a proper risk management with it is not so difficult. What is actually difficult is the emotions you have in your head while you are in the trade. And to be successful, you need to turn on every bad emotions while in the trade. So turning off these bad emotions is what is meant by trading psychology. So now, let's talk about the 4 worst emotions that will kill your trading psychology. And in fact, these are the most common emotions. Number 1 is greed. For example, you have a strategy that indicates that you should only risk 2% of your capital on a trade, but you went ahead to risk more because you believe that the trade will go in your favor. This is greed. And it is bad emotions that will affect your trading psychology. You need to be aware of that. You need to follow your trading psychology. All the rules in your strategy, you need to follow them. Number 2, anger. For example, you lost your last trades. Then you try to revenge the market by entering a trade that is outside of your strategy. This is very bad because you lost your last trade now, and then maybe some part of the entry criteria in your strategy is occurring at the market, but it's not all the entry criteria, maybe part of it. Then you decided to enter the market. That's bad. You need to wait for all the rules to be present in the market before you enter it. So oftentimes the market will end up losing more of your money. And as trader, our job is to continuously follow our strategy, no matter the emotions that comes into us. Number 3, another bad emotion is fear. This happens when you see a trade that meets all your set of rules. This is like opposite of anger. You see a trade that meets all your set of rules in the strategy, but because you lost your last trade or last couple of trades, you are afraid to enter this new trade. Now, what you don't know is, what if this is the trade that will put you into profit? So fear doesn't allow you to enter the market despite all the entry rules. So you shouldn't be afraid so far you see all the set of rules present in the market. And lastly, another important emotions that will kill your trading psychology is fear of missing out, FOMO. For example, you see a currency pair selling or buying fast, and your emotion tells you like, oh, get into the market. But this is not in your strategy. You don't see the entry rules present. You only saw the market moving up or moving down fast, or if for some reason you believe that you have to get into the market for you not to miss out. But your entry rules are not there in the market. This will likely go against you and drop your win rate because you have taken actions that is not in your set of rules. These 4 emotions will kill your trading psychology. So now let's talk about the 2 things that will eliminate these bad emotions and boost your trading psychology. In fact, you are going to get a professional level trading psychology if you execute what I'm about to tell you guys. The 2 things that will eliminate all the bad emotions is belief and courage. These 2 things are not so easy to achieve as a trader, but with effort, you are going to get them. And the reason traders will experience bad emotions that was mentioned is that they lack belief and courage. Now, imagine that you have a strategy that is certain to make you money at the end of the month or at the end of maybe 5 trades or 10 trades. Are you going to trade the strategy? You believe that after 5 trades, this strategy will put me in profits. You believe that. Are you going to trade the strategy or not? I'm very sure that you are going to trade it. You are going to trade it because you believe. The belief is there. Alternatively, if you are not certain that the strategy will make you money at the end of the month, I'm sure you will not trade the strategy. And if you trade it, you will likely make mistakes because you lack belief in the strategy. So how can you go from someone that has little to no belief in a strategy to someone that has a very strong belief in a strategy? I'm very sure you must have heard a saying that goes along, seeing is believing. You need to see the strategy work in the market to be able to believe in it. Now, how can you see the strategy work? Very simple. You need to backtest the strategy. It's one of the ways to improve your belief. So do this for the last 3 years at least. Get a strategy, understand the set of rules. In fact, have the rules written out in a paper beside you. Then backtest this set of rules in the market. I'm very sure after doing this for the last 3 years of the market, you are going to have your belief increase. In fact, you are going to see your belief skyrocket. So far, if the strategy works, and if it doesn't work, you are going to understand that the strategy doesn't work and I'm going to teach it. So if you are enjoying this video and found it helpful up to this point, please leave a like on this video and a comment, as this goes a long way and helps support this channel. I appreciate it, guys. So let's get back to the video. Another way to improve your belief in a strategy is to see someone else use it successfully. This is also very important. So following the guidance of someone that has backtested the strategy thousands of times is one of the fastest way to make money trading Forex, guys. It's very simple. Someone that you trust give you a strategy that works. To some extent, you are going to believe in the strategy, and this will affect your trading psychology positively because you have some level of belief in it. And if you go along and backtest the strategy yourself, this will even increase your belief in the strategy more, and you say have a good impact on your trading psychology. So the number 2 thing that will boost your trading psychology is courage. So how can you go from being afraid when trading a strategy to having courage in the strategy? It is simple. You need to see the strategy make money in the market without testing it with your own money. So a method of doing this is called demo trading. So demo trading is the process of trading the live market now using your real capital. This is very important. So you create a demo account with your broker and then you trade. So if you demo trade a strategy for 1 to 6 months and you see your demo account grow significantly, I'm very sure that you are going to go from someone that is afraid in the strategy to someone that is courageous in using the strategy. This is very important, guys. So backtest and demo trading are one of the main things you need to improve your trading psychology, because they will improve your belief, which is important, and they will make you courageous in whatever strategy you are using. Now, if you guys enjoyed this video and found it helpful, please show your support by hitting the thumbs up button, subscribe to our channel and turn on the notifications bell so that you can keep up to date with the new content we release. Also, leave your questions and thoughts below. This goes a long way, guys. Now, knowing trading psychology is only part of the process, guys. If you want to be successful, you need more. So, get our exact chart analysis and signals to get fast results at t.me/WestBellisyFx. This is completely free, guys. So head on to t.me/WestBellisyFx now and I will see you there.